Hello everyone, welcome back to Unday Radar Talks. Tesla stock plunged 8.4% on Friday, completely giving up the gains of the previous 2 trading days, and the current price has fallen below the 5-day moving average, which does not seem good. The stock generated a lot of transactions at $229.60, which means that a lot of capital has exited the market at this position, which also indicates that the stock price may not return to this position in the short term. But the problem is that the $220 position has not stopped the stock price from falling, and the panic in the market has accelerated the selling of shorts. However, the stock had a huge trading volume at the end of Friday, which seems to indicate that despite the stock price plummeting, a lot of capital still flowed into the market on that day, so the stock still retains hope of rebounding, but the height of this rebound may be limited. In fact, in addition to the large amount of transactions at the $229.60 level, the stock has a larger trading volume between $220 and $208. But the pessimistic thing is that the current price is not in a favorable position, which means that if the stock price rebounds, it will face great resistance, but as mentioned earlier, the bulls may still try to fight back at this position. Let's take a look at the 15-minute chart of the stock. We can see that the stock price rose strongly to $235 in the morning trading on September 5th, and then the stock price quickly retreated. This process generated a large trading volume. Yes, this is a signal of capital outflow. The stock fell strongly below the $220 level after opening on September 6th, and the bulls hardly formed any effective resistance at this position. But it is worth noting that the stock generated a huge trading volume at the last moment of the closing. It seems that big capital has adopted a passive strategy of taking over chips at this position, which is also the only hope for the stock price to keep counterattacking. Let's take a look at the capital flow data of the stock. We can see that the net outflow of the stock on September 6th is more than the sum of the net inflows in the previous 2 trading days. Such capital flow data not only reflects that the capital outflow from the market on that day accounts for a large proportion, but also reflects that a large amount of capital has withdrawn from the market in the previous 2 trading days, especially on September 5th, because the trading volume on that day is higher than that on September 6th. So this may be a planned cashing operation, which also determines how the stock price will move in the future. We just don't know some of the facts, but it is unlikely that funds will continue to flow out in large quantities. Let's take a look at the market position distribution data of the stock. We can see that $220 is the current position peak of the stock, but there are also a large number of positions distributed between this position and $208, which means that if the stock price rebounds, then this area will undoubtedly cause huge resistance to the stock price, so the stock's rebound will be extremely difficult. But as mentioned earlier, the stock had a large amount of funds flowing into the market at the end of Friday, and the stock stopped falling at the level of $208 at the end of August, so the bulls also have reason to fight back at this position. So I think the stock may consolidate between $208 and $220 next, but it is unlikely to break through $220. Once the overall market situation becomes worse, the stock may reverse and fall, and even fall below $200. Okay guys, this is my price forecast for Tesla stock. Thank you for watching. If you like my analysis, please click the subscribe button and give a thumbs up. I will bring you more latest price predictions for popular stocks later. See you in the next video.